Our coverage begins now, as global finance watchers are riveted by an extraordinary development, the rumor of a pending IQD and VND RV countdown, that is, a possible revaluation of the Iraqi Dinar and the Vietnamese Dong. Sources deep in the global banking system suggest that exchange rates between these two emerging market currencies and major world currencies have seemingly been locked in place, creating a countdown atmosphere in the global foreign exchange arena. Tonight, we deliver a fully detailed, professionally urgent report. Listen closely because the implications could reverberate through investment portfolios and economies alike. In recent days, analysts at major currency trading desks report unusual behavior in the quotations of the Iraqi Dinar and the Vietnamese Dong. Rather than fluctuation, these currencies have held remarkably steady, even in the face of volatile global markets. This has triggered a wave of speculation. Are the rates being artificially held, waiting for an official announcement? Is there coordinated intervention poised for release? And crucially, what would that mean for billions in currency holdings scattered across the globe? We bring this to you as a breaking narrative. The rumor mills are abuzz with talk of locked-in rates. These are not just passing murmurs. They are echoing from traders in London, Dubai, Hanoi, Baghdad, Singapore, and beyond. The stakes could not be higher, and we have 10 minutes to walk you through the full landscape of this phenomenon. There is urgency in the air as moves could happen at a moment's notice. On one side stands the Iraqi dinar, long regarded as a deeply undervalued currency. For years, investors have debated its potential for revaluation. Today's environment has taken that discussion to new heights. Foreign exchange desks are reporting, quote, rigidity. The dinar's rate against the US dollar is holding firm, even as oil prices bounce and global risk sentiment shifts. That is highly unusual. Under normal market conditions, swings in oil, sovereign ratings, regional risk, or political developments would ripple through the dinar's valuation. Yet the rate remains unmoved. That has prompted chatter of central bank intervention or scheduling of a revaluation announcement. On the other side, the Vietnamese Dong is equally in focus. Vietnam's economy has grown rapidly, attracting millions of dollars in foreign direct investment. Its manufactured exports are booming, and inflation remains measured. Yet the Dong has not adjusted. It remains pegged or quasi-pegged, and again, quotes remain uncharacteristically stable. Traders describe the Dong as locked, with little to no deviation in forward swaps or spot prices. The comparison with the Iraqi dinar is stark. Both currencies seem to be in a holding pattern. What does it mean for global exchange? If indeed IQD and VND are preparing for revaluation, the effects could cascade. Currency revaluations can shock markets, creating windfalls for holders, distress for borrowers. Countries that hoard questionable or speculative currency holdings could face surprise gains or losses. Hedge funds may scramble to rediscover positions. Remittance flows, import-export accounting, and central bank reserves could suddenly be repriced overnight. Multinational firms with currency exposures in Iraq or Vietnam could wake to vastly different translation results. We emphasize that this is not yet confirmed. There has been no official announcement from either the Central Bank of Iraq or the State Bank of Vietnam. No press release, no government statement, nothing. But markets smell something in the wind. The countdown atmosphere has been described by FX traders as akin to the waiting period before a peg break or revaluation of an emerging market currency. Historically, such moments have led to explosive volatility. Let us look deeper at the rationale behind such a move. For Iraq, the country is eager to fund reconstruction, manage inflation, and stabilize fiscal policy. A higher-valued currency might reduce costs of imports and energy subsidies. It could signal to international investors that economic reform is serious. On the other hand, Iraq relies heavily on oil revenues, so any revaluation that weakens the dinar may hit budget receipts. Perhaps that is why the rate appears locked. Policymakers are weighing the impact, carefully calibrating. In Vietnam's case, the government faces a balancing act between promoting competitiveness of exports and controlling imported inflation. The Dong has remained weak enough to support export industries. But as inflation concerns mount and domestic consumption strengthens, the Dong may need to rise. This would ease import costs while still keeping trade surpluses intact. A stabilized rate today may indicate that policymakers are lining up conditions for a measured revaluation, one that avoids market shock. Traders in Singapore and Hong Kong inform us that forward pricing on both currencies reflects virtually nil expectation of movement. In healthy markets, forward curves would slope in accordance with interest rate differentials. Instead, they remain flat. That suggests to many that central authorities or institutional traders have effectively pinned the rates temporarily. The countdown feels palpable, like the tide has paused just as the waves crest. No rise, no fall, just waiting. As this develops, we must ask, what are the implications for individual investors, speculators, and corporations? For currency speculators who have long held positions in IQD or VND, the countdown is both excitement and anxiety. A revaluation could lead to double or triple-digit gains, but only if timed correctly. If misjudged, rapid rate moves could trigger heavy losses, especially amid leveraged positions. Risk management is essential. Multinationals with operations in these countries face a different calculus. Should they hedge now, anticipating a shift, or ride it out? Budget forecasts, price-tagged contracts, cross-border payments, all may need review. Revaluation could mean higher repatriated earnings in dollars, or create mismatches if liabilities remain denominated in USD. Treasury teams are likely working overtime, scenario planning each second. We also must consider macroeconomic traction. A revalued dinar could cool inflation, but may also reduce competitiveness of local producers. A stronger dong would raise import capacity, but could dampen export margins. Policymakers must weigh domestic pain against global positioning. That they may be coordinating a simultaneous release underscores how much is at stake, and why FX desks feel the countdown tick-tocking. While speculation runs wild, we cannot ignore the possibility that no move comes, and the locked rates are simply due to market inertia, insufficient liquidity, or coordinated market maker strategies. Until there is confirmation, all players remain on high alert. That tension is exactly what gives the story its urgency. Let us imagine what unfolds in the next hours or days. Suppose the State Bank of Vietnam issues a statement adjusting the dong upward by 2%. Immediately, dong-denominated bonds, liabilities, and trade invoices reset. Asia-Pacific markets adjust. Export-focused VN equities might wobble while importers cheer. Southeast Asia, watchers scramble. Simultaneously, if Iraq's central bank floats an announcement lifting the dinar by 5%, petrodollar inflows, reconstruction contracts, and Iraqi diaspora remittances could tilt. Suddenly, arbitrage desks bid IQD, squeeze volumes. Bank spreadsheets adjust overnight. Portfolio managers scramble to rebalance. Alternatively, both could remain locked. Rumors fizzle. An absence of action turns the hunger to frustration.
Market sigh.
Liquidity returns, but with renewed skepticism. Speculators who eyed revaluation cut bait. Governments quietly avoid disruption. The countdown ends not with a bang, but with a slow exhale of anticlimax. Through all this, we emphasize that everything is speculative until confirmed. We are in breaking news territory. Our mission is to capture the energy, the uncertainty, the stakes. Traders grip their phones, central banks call in emergency meetings, algorithms sit poised for spikes. Time is compressed. Clocks tick in the silent hallways of finance ministries in Baghdad and Hanoi. We should also watch regional spillover. A revaluation could ripple to neighboring currencies. If VND rises, perhaps the Thai baht and Malaysian ringgit recalibrate. If IQD shifts, currency markets in the Gulf, Iranian rial, or Jordanian dinar may take notice. Forex markets are interconnected. A change in one notable developing market currency forces reevaluations across corridors. Bond markets are alert too. A revaluation may affect sovereign yield spreads, impacting borrowing costs. Debt issued in local currency could become more or less attractive. International capital flows might shift as yields respond. This is not simply forex drama. It penetrates bonds, equities, trade, development. As the report continues, listen to